Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep America from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
Well, welcome everyone. It's great. Always great to get back in front of the terrestrial radio show microphone. Not that I don't enjoy doing the podcasts. I do. But I love doing the old school radio show. I do miss fielding the questions, though, on air. We're on so many different times and different places. It's not even worthwhile doing it because you throw a number out and then, people are calling and it's not live and all that good stuff. But listen, I take your questions. I take your questions via email. And I try to get to as many emails as I possibly can. And actually, we kind of drive the weekend radio show in many respects based upon your input over the course of the week. So, topic comes up, questions about whatever it may be. I definitely try to build a program around that. Obviously, if it interests me as well. But we're pretty much on the same page. One of the questions that keeps popping up, especially now with all the market volatility that's taken place. Is Chris, why don't you do your podcast, your daily show? Why don't you do it after the market closes, so you can give a rundown and kind of explain what happened? I like doing my show bright and early in the morning. I do constantly in a state of doing prep work from when I do after I do the podcast all the way through. I'm here to tell you, I'm not that smart, people. Okay, when the market goes down, let's say X amount of points, 800 points, I can't put my finger on why. Never been able to do that, nor has anybody else. Now you can watch those post-market programs, and they can try to explain to you why, but they don't know either. And there's a myriad of different reasons. There's a zillion different things that are baked into what the market is going to do over the course of the day. Something that I have never been able to do is time it, figure out why. But that's okay. That's okay. The old Dirty Harry, man's got to know his limitations. Well, it's not just me. Nobody's been able to do it. Nobody has been able to do it. If someone who was able to do it, actually be able to do it, they'd be the wealthiest person of all time. It's just not possible. For years, various different radio stations had asked us, hey, Chris, why don't you Watchdog on Wall Street, Markowski Investments, why don't you guys do a market wrap at the end of the day? You know how they have those things at 4 o'clock? Radio stations, television stations. This market wrap is sponsored by XYZ brokerage firm. Today the Dow did this, the NASDAQ did this, the S&P did this. So what? Who cares? If your finances, if your portfolio, if you need to know what the market did on any given day, you're not going to do well. You're not going to do well over time. I was thinking, I got all these various different charts comes to the market, right? Basically, what is a market? What makes up a market? You got prices that go up, you get prices that go down, right? Nothing goes up in a straight line. You hear that again and again and again. But then if you take a look at a chart. Take a look at a chart of the S&P, the Dow, total market index, and you look at it from afar. You look at it from afar. You put it up on a wall and you back up 10 paces. What are you going to see? You're going to see a chart that looks like it's going pretty much straight up. But if you move closer and closer and closer to that chart, you're going to see times when it didn't go up, when it went down. And it reminded me this past week, and I mentioned this on the podcast, one of my favorite 1980s films, Ferris Bueller. And there's a great scene in Ferris Bueller. I don't know. I think it turned a lot of us Gen Xers onto art appreciation. It really did. It was at the Chicago Art Museum, and they're going around and they're taking a look at the wonderful paintings and all the great art. I love to do that too. And there's one of the characters, Cameron, is staring at a painting on the wall. It's a George Seurat painting, and it's the title, when I looked it up, is The Island, Sunday Afternoon on the Island of La Grande Jatte. And he looks deeply at that painting, and the camera just zooms in closer and closer and closer and closer and closer until you see the little dots of paint. You pull away from it, and then you see this beautiful, this wonderful, wonderful painting. That's the same thing, people. If you're confining yourself to the here and now and what's happening now, you're not going to do well. I mean, I was even listening to various different pundits. I get a kick out of them. You know, again, this is necessary. It's what they have to do on these business programs. And one guy was fretting about the markets right now, but then he was like, "Yeah, but by next year, everything should be fantastic." I'm like, do you understand in the grand scheme of things? Basically, what you're talking about, we're discussing, really doesn't matter. You know, I mentioned this several weeks ago on the program, a column that I wrote back in 1999. I cited a Terrence Odine, who's a professor at the time, who's a professor at the University of California at Davis. I think he's at Berkeley now. And he basically did a demonstration. He went through thousands and thousands and thousands, 10,000 portfolios, actually. 10,000 portfolios at the time, the discount brokerage firms. And, yeah, he found what we knew to be true, is that investors were, believe it or not, 1.5 more likely to sell winners than losers. Worse yet, the stocks that investors sold, on average, perform better than the ones that they held. I thought this was interesting because I don't know if you saw Robinhood. Robinhood, yeah, free brokerage firm, free trades. Take a look at their numbers. Yeah, again, we told you this was going to happen. They could be a high flyer for a while, but when you lose your client, your clients lose their own money. But when you induce your clients to do stupid things with their money and they're eventually going to lose it, well, then your numbers are eventually going to go down. Now, when you're taking a look, market stress, whatever it may be, okay, when we have a new portfolio come in, and this happens, regular basis, people signing up for our personal CFO program, and we want to, get their finances in order. And you have to go through. You have to take a look. You have to take a look at every single position, and you find out, which, if you knowing what you know today, would you own that company today? It's all about choosing wisely. There was a retirement plan study that was recently conducted. The amount of people that just made really stupid mistakes. This is just over the past couple of years. due to COVID when it came to their finances and their 401k was extraordinary. But this is stuff that we know, stuff that we've talked about here on the program now for a couple decades and then some. We've been on the air for 22 years now. And we've seen the same thing again and again and again. Something happens, a disconnect in the market, the sky is going to fall, the world is going to end, and then people go out and they start making poor choices. And this time it's usually out of fear. I mean, investors make too many, again, human beings are not hardwired to be very good investors. They really aren't. Because they operate, unfortunately, when it comes to money, out of greed and fear. That's not rational. You don't want to do that as an investor. I mentioned this. I mentioned this again several weeks ago. I thought I was bringing it up again. The great investment analyst, author of The Intelligent Investor. Guy, again, I never met the guy, but he most certainly was one of my teachers. I've read all his stuff. Warren Buffett as well, big follower. Berkshire Hathaway, folks. This guy, Benjamin Graham, he stated in a speech. This is back in 1963. And again, at that time, he had more experience than I have currently. You know, he had 5 decades or in 3. He said, my nearly 50 years of experience in Wall Street, I found that I know less and less about what the stock market is going to do. Sound familiar? Yeah. I said, I've been doing this for a long time, too. I don't know what the stock market's going to do. I don't. And anybody who tells you with any sort of certainty that they do is lying to you. They don't know. They're giving you your best guess. I don't like to guess. I don't understand it. I don't like to gamble. I don't go to casinos. I don't want to guess what the stock market is going to do. So again, like Benjamin Graham, I know less and less about what the stock market is going to do, but I know a hell of a lot about what investors ought to do, what investors should do. And again, this is why I invite each and every one of you out there to become a part of our family at Markowski Investments, the Watchdog on Wall Street radio show, and sign up. Sign up for our personal CFO program. Now, I want to make this perfectly clear to everybody out there, okay? We don't discriminate. We don't. Now, I'm not talking all that woke nonsense, which drives me absolutely berserk. I'm talking, I don't care. We help everyone. You got a lot of the big investment firms that are out there. Oh, yes, you must have at least $10 million to. No, we help everyone out. We always have. We've managed to put together something which is completely different than anybody else. We have, in essence, we have a family office for everyone. And this is where you're gonna be able to learn. You're gonna be how to navigate financial storms, how to navigate corrections, volatility, how to avoid serious risk between the conventional wisdom of the day and the reality of the terrain. Where are the best safe yields? You're going to find out. Again, compounding, the royal road to riches, something that's a large part of what we do. And I'm inviting each and every one of you to become a part of it. Week after week, countless portfolios come in, and we go through the process, and we have all of the tools. We have all the tools. You're not satisfied with the people that are doing your accounting, your legal. We have all of that for you. So again, I invite you to get to our website at watchdogonwallstreet.com. Sign up for it right there, the Markowski Investments Personal CFO Program, watchdogonwallstreet.com. We also We also have a lot of the great stuff as well. Podcast, newsletter, you name it, all right there. WatchdogOnWallStreet.com, or you give us a call. It's 800-471-5984. Either or, okay? Go to either of spot, and we're here to help. We've got a lot we've got to go over on the program today. WatchdogOnWallStreet.com is our site. We shall return.
Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
You know, in honor of Ferris Bueller, 1986. We're doing it again. Yeah, I'm enjoying doing this, hits of certain years. So we're going to do hits from 1986. Now, John, correct me if I'm wrong. That was Eddie Murphy's "My Girl Likes to Party All the Time." Okay, "My Girl Likes to Party." That song is a hit again. I heard my kids cranking it, but it's not. It's some they remade it, and it's back. It's back. Eddie Murphy's tune is back. But anyway, let's talk a little bit about speculation. Let's talk a little bit about investment and kind of our philosophy when it comes to both. The distinction, the difference between investment and speculation when it comes to markets, when it comes to stocks. You have to understand the difference between the two. I don't speculate. Okay? We invest. I'm not a speculator. I'm not. And unfortunately, you know, what you're taught, again, we talk about conventional wisdom all the time. What you're taught by the big brokerage firms, what you're taught by the business press out there, it's problematic. It really is. This is why people take such heavy losses, because they all of a sudden they're speculating, but they think they're investing. And we see this in NFTs, in cryptos. That is all speculative nonsense. And again, if you want to take for a little fun, you want to take a small portion of your portfolio and you want to speculate, okay. But it can not lead to ruin. You know, the goal is you want to own meaningful companies, meaningful businesses that have advantages, durable economic advantages, top management. When we invest in something, the goal is we never want to sell out of the entire position. Now, we talk about trimming and portfolios as certain positions become outsized in regards to the overall asset allocation. I get all that. But the goal, you invest your hope that company is going to be around forever. Now, it's not always the case. Things change. I remember a marketing ploy back in the back in the late 60s, early 70s. I remember what brokerage firm did. It was called the Nifty 50. And in the Nifty 50, the whole concept behind their sales pitch is you could buy these 50 stocks and it wouldn't matter. They were going to last forever. Well, that's just not true. Things do change. The fundamentals change. Prospects oftentimes change. But again, this is we're not stock pickers. Okay? That's not what I do. I don't look at something as it's a stock. I look like I want to buy a company. I want underlying ownership in a business that I believe in. I know there's the entire industry out there. Day trading and fast trading and high-speed trading and algorithmic trading and all that stuff. Again, a lot of it's fed by headlines. Fed by headlines. It was interesting. They had a fake headline come out this past week about Facebook. Drove the stock down. It was a complete opposite, but it didn't matter. All the algorithms headed in the wrong direction. People, again, big difference, speculation, investment. Invest. Don't speculate. WatchdogOnWallStreet.com. We'll be back.
Is it east versus west? Or man against man? Can any nation stand?
Chris Markowski is the Watchdog on Wall Street. This is the Watchdog on Wall Street.
Across the sea into my soul.
Another great one. Mister. Broken Wings, another big hit by them as well. Anyway, welcome back, everybody. It is the Watchdog on Wall Street show. Again, always an honor to have you tuned into the program. Some of the biggest investing mistakes, they don't come from doing your homework. It's not analytical. It's not informational. But it's psychological. It's psychological. We go back to, mentioned Terrence Odine and what investors do. You know, the concept seems pretty straightforward, right? Buy low, sell high. Why is it so hard for people to understand that? Just is. It's the way people are hardwired. And that's why investors do so poorly again and again. And they can't keep up with performance. So many people, not so much individual investors, but hedge fund managers, star portfolio managers. You know what? I think about it. I was watching. The lady was honest, actually. I can't remember what firm she was with. But she's on CNBC often. I'm trying to remember her name. I've been on television with her before on Fox. It'll come to me in a minute. But anyway, talking about the markets, and she, I don't know, it was a Freudian slip. She said, talking about long-term investing, and she came out with the statement, it's difficult for money managers because they get judged on a quarter-by-quarter basis. They do? They do. Well, again, why would you judge a money manager's performance based upon a quarter? Let me try to put this a different way. If you invested in a restaurant, you invested in a startup pizza parlor, and you put your money in, would you all of a sudden within 3 months expect that pizza parlor just to be killing it? No, it might, but it might not. You might run into some issues with, permitting, COVID, whatever it may be. Whatever it may be. Do you expect that investment in 3 months, you invest in a restaurant, a pizza parlor, to do that well? No, why would, but again, the media does this. They parade these people on. They parade these people on and treat them like rock stars when they've done well over 3 months, but their 10, 15, 20, 30-year performance stinks. The old saying, you got to see the forest for the trees. I mean, for crying out loud, why do that to yourself? Oh, I'm watching so many of these star portfolio managers. They're closing up shop. They're returning money. And I take a look, and again, take a look Put a stock chart on a wall and take 10 steps, 15 steps back and look at it. And say to yourself, how do you screw this up? How do you screw this up? If you are conservative, with your money, you're going to do well. Yeah, I get that often when I speak to young investors, people signing up for their first 401k. We do a lot of 401k plans for businesses around the country. And, the conventional wisdom is, I've got a lot of years, so I can afford to be really, really aggressive. I almost threw up in my mouth. That was Fidelity this past week. And they're doing it because they're giving the customer what the customer wants. I don't agree with it. And I'm a libertarian guy, I guess, but, I can be really cautious. They got to start putting cryptos in 401ks. Oh, boy. We'll see how that turns out. It's going to turn out as well as, people's apps on their phone for trading stocks with constant alerts coming. How that worked out real well. Ugh. Yeah, Robinhood clients did real well. Not. People. Again, you have to focus on the long term. Why would you speculate if you have a lot of time? Doesn't make any sense. You're going to be rich anyway. That's the advice to the young investors out there. Hey, you want to invest in high quality companies. You want to do all of that. Why would you get overly aggressive when you can't access that 401k for a very long period of time? You will get there anyway. It's not a matter of if, it's a matter of when. Got to take a break. But again, we'll remind everybody, become part of the Watchdog on Wall Street family. Get to our website, watchdogonwallstreet.com. Sign up for our personal CFO program, our podcast, all sorts of great stuff there at the site, watchdogonwallstreet.com. We'll be back.
The only man who is taking on the Wall Street establishment. You're listening to the Watchdog on Wall Street with Chris Markowski.
Welcome back, everybody. It is the Watchdog on Wall Street show. Another large swath of questions that have been coming in is in regards to the Federal Reserve and interest rates. And I can't tell you how many times you hear it on programs out there. You can't fight the Fed. Can't fight the Fed when it comes to investing. Can't fight the Fed. It's like, I'm going to go out there and start, swinging at Jay Powell. I mean, come on. People, how about this? How about I'm not going to pay attention to the Fed? How about I just focus on the quality of the companies in the portfolio and not care about what the Fed's going to do? Oh, sure. Yeah, does it matter in regards to asset allocation in our portfolios? Absolutely. Absolutely it does. Was my job a hell of a lot easier? Hell of a lot easier when the 10-year Treasury was at 6-7%. Sure was. It was, get a hell of a lot better safe yield than you can get today. And they keep talking. The Fed's raise was going to be 75 basis points. They're going to be 50. How many times they're going to be raising into 2023? I don't care. It really doesn't matter to me. And if you actually take a look, there's been 10 periods just since 2000. Since 2000, there have been 10 periods where the yield on the benchmark 10-year Treasury rose by 1% or more without falling by 50 basis points. And you take a look at this and the type of performance, it doesn't matter. I said, it's a ruse, people. Do you understand? It's a ruse. They want you to do something. A lot of money is made on Wall Street by having you do something. Oh, my God, Fed's rising rates. It's going to be terrible. You got to do something. Change this, move this, do that. No. Yeah, are certain companies more sensitive to higher rates and vice versa? Sure. But again, does it matter when you have an outlook and you have a time frame that's much longer? 5, 10, 15, 20 years down the road? No. It doesn't. So the whole idea of trying to decipher what the Federal Reserve is going to do, again, it's a complete exercise in futility. They basically told you what they were going to do. You're going to make changes based upon that. I just disagree. I think you're doing things the wrong way. And it's popped into my mind going back to the old days when Alan Greenspan would be walking in. Oh, my God, all eyes, got a camera on him, and CNBC had their briefcase indicator. That was for fun, right? They used to say, well, it's kind of like the Groundhog Day. How thick is Alan Greenspan's briefcase? What is he going to do with rates? I don't care. Doesn't bother me either way. Anyway, got to take another break. Again, watchdogonwallstreet.com, our site. Take advantage of all the great stuff we have there. Personal CFO program, podcast, newsletter, account repair kits, you name it. Watchdogonwallstreet.com or give us a call, 800-471-5984.
You're listening to the Watchdog on Wall Street. You should believe in math, not magic. You're listening to the Watchdog on Wall Street with Chris Markowski.
That's a great Steve Winwood. Oh, man. This is a great album, too. Anyway, welcome back. It is the Watchdog on Wall Street show. We talked about this a year ago on the program, and, well, he was arrested. This past week. Bill Wong. He was in charge of Archegos, and he was charged with racketeering and securities and wire fraud. And basically what he did was he managed to lever his portfolio up. He had a portfolio family office of about $1.5 billion. And magic, it's Wall Street magic. Oh, we sprinkled some pixie dust on the portfolio, and all of a sudden it's over $30 billion. Only on Wall Street. Well, with the aid of your buddies, the aid of Credit Suisse, with the aid of J.P. Morgan, we're going right on down the list. All these big firms said, hey, sure, Morgan Stanley, Nomura. Yeah, all of these, these people that are looking to pad their bonuses at the end of the year and doing really insane things with money. The financialization of this country it's not a good thing. It's not a good thing. We explain what leverage is, okay? Leverage in what you're doing is you're trying to take the future and bring it into today. But when you do that, it's some bastardized version of the future. It's not real. It's fake. It's fake. It looks like someone, I'm sorry, maybe, people that have way too much plastic surgery and fill and all this stuff. It looks like hell, for crying out loud. And that's what all of this financialization, that's what all of this leverage does. And the thing blew up. And a lot of these big firms took a hit. This guy got arrested. It's not just there. though, people. You kind of wonder, people see these stories and they scratch their head. How does that happen? How do things like this happen? And I always go back to my Carlin bit. It's a big club, and you ain't in it. Now, I don't know what's going to happen to Bill Wong. I don't know what's going to happen to Bill Wong. He might get in trouble. He might get in trouble. I wonder if anybody from those investment firms that helped him lever up his portfolio to that degree, I wonder if they will get into trouble. Probably not. Probably not, because in this country we have something that's called too big to fail. And if you are a member of the club, you're one of the too big to fail companies out there, nothing really is going to happen to you. Maybe a fine. That's what we say. You'll pay, might have to pay a fine, and you'll walk away. Things that if you and I were to do, we'd go to jail for a very long time. I mentioned that before. I said, Eric Holder, the Attorney General under Barack Obama, was asked about this very thing in front of Congress. He's like, going after these crooks. What am I going to do? I'm going to hurt the economy? I'm going to hurt the banks going after these executives? So they're going to do it. So in essence, you remember the club, it's a license to steal. And I look at various different, you see a lot of companies that went public with these SPACs, and we warned everybody about these SPACs and the big wigs that are involved in these companies at the bottom. And I saw when they were selling their stock in various different ways on the way up, knowing, it's going to come down here, buying it again or exercising their options, selling it again on the up. You and I can't do this. This is a whole nother world. Well, you could do it if you had an ethical bypass at birth and you know the right people, but we choose not to. And again, remember the old Martin Sheen character, Wall Street, tells his son, Bud Fox, I don't go to bed with no whore. I don't wake up with no whore. That's how I live with myself. I don't know how you do it, kid. Again, we hope that at some point in time, these things will be cleaned up. But I'm not holding my breath by any stretch of the imagination. Anyway, another one here. Ex-Morgan Stanley advisor ran a Ponzi scheme, caused millions in investor losses. Again, I see stories like this, and I say to myself, how the hell does that happen? How the hell does that happen? I run a firm, okay? I run a firm. We have a myriad of offices around the country. I can't fathom how this happened. Morgan Stanley, with all of the resources that they have, the compliance offices they have, how in the world does one of their, they call them advisors, schlock brokers, run a Ponzi scheme out of one of their offices? What you understand how involved that is? I'll tell you what my theory is. I'll tell you what my theory, real simple, okay? They look the other way. Again, the office manager, the sales manager at this was in North Carolina. Sales manager at that office said, my bonus is based upon how much money that the schlock brokers are making. Oh, they're making a lot of money? Well, I'm not going to ask any questions. They have bloody compliance departments that are supposed to look into all of this. Yet again, week in, week out, I get story after story. SEC charges 16 people for raking in $194 million in international penny stock fraud. I go right on down the list, people. Week in, week out. Got to take a break. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Don't go anywhere. We shall return.
Chris Markowski is the Watchdog on Wall Street. investment banker, consumer advocate, analyst, trader. Chris Markowski is the watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
I mean, can't he just go away? Do I have to see another news story or see this guy's mug on TV? John Kerry, I'm sorry. Do I have to? I think Kerry is now the climate czar. We had czars as Obama started all those czars, remember? What was the guy that he hired? It was the CNN. He ended up becoming a CNN anchor, but they couldn't end up making him. It was the climate or green job czar. Green job czar. They found out that he was like a member of the Communist Party or something like that. And I remember making fun of it at the time, the concept of czars, a king. I carry around my Constitution with me all the time. I don't see where the founders, they put anything in here when it comes to czars, but we now have them as the bureaucracy gets bigger and bigger and bigger. So here we got John Kerry. John Kerry just a few months ago comes out and he says that natural gas needs to be what he called a bridge fuel. A bridge fuel to eventually going towards solar and windmills and all that other stuff. But then what did he say this past week? I'm not making this up. We have to put the industry on notice. You've got 6 years, 8 years, no more than 10 years, within which you've got to come up with the means by which you're going to capture emissions. And if you're not capturing, then we have to deploy alternative sources of energy. Do you think that energy companies are going to want to invest? Do you think they're going to want to go out and drill and create more and get more energy to lower prices for all of us? If you've got buffoons like John Kerry basically saying we're going to put you out of business in 10 years. And again, I go back to Obama. He basically said the same thing about the coal industry. He said, we'll just regulate you out of business. The technology to capture CO2 emissions, it's not there. It's nowhere close to being there where you're going to be able to capture them all. It's not scalable enough to do that. Let me ask you a question. Who's going to invest in new pipelines? Who is going to invest in new pipelines if this is the case? If you're going to limit natural gas, John Kerry's coming in and limiting natural gas to 10 years. You take a look at the price of natural gas. You think it's bad here? Why don't you take a look at Europe? Why is that? Well, it's just, you can pick up your Econ 101 textbook and recognize that production is not keeping pace with demand. And these are the people that we have in charge. And this is the small-minded thinking that we have that holds us back. And again, I allude to it all the time here, how much potential we have as a nation. And we're wasting it. And I love that line from A Bronx Tale. Saddest thing in the world is wasted talent. I want to talk about this interview. Alyssa Finley, the Wall Street Journal, did an interview with the CEO of EQT Corporation. And its name is Toby Rice. Name is Toby Rice. And Toby Rice came under fire by none other than Elizabeth Warren, Elizabeth Warren said Toby Rice and other CEOs like him, they're corporate greed. They're making too much money. They're selling their liquefied natural gas overseas, and that's corporate greed. Toby Rice actually sent a 9-page response to Elizabeth Warren that was full of data that basically showed that the nonsense coming out of her mouth was without merit and fosters a, quote, a narrative that politicizes natural gas and associated infrastructure in a manner that runs counter to one of our key collective goals, one we know you share, addressing climate change. Miss Warren and her ideological compatriots style themselves champions of the little guy and the environment. Nonsense, Rice says. Their policies mean higher prices for consumers and more carbon emissions. If you're blocking pipelines, you're blocking the biggest green initiative on the planet. Again, I've said this again and again and again. You left-wing lunatics, you see how much they're paying for this in Boston? They're still, they're getting their natural gas from Putin because they won't put a stinking pipeline in, for crying out loud. Think about that for a second. Energy companies have already given up on 2 major pipelines in the Northeast. This is the past 2 years. This is after they won their battle in the Supreme Court. Oh, just more regulations, more permitting, more legal challenges every direction. Eventually, they're like, screw it, I'm not going to do it. The 4,000 pages of permits that were submitted, what does that do? That creates 4,000 opportunities for various different groups and government groups to attack. Toby Rice talks about the Mountain Valley Pipeline, which aims to deliver cheap gas from Appalachia to the southeast. 3-member panel of the 4th U.S. Circuit Court of Appeals keeps nitpicking the government's environmental reviews, forcing the energy companies back to the permitting table. The pipeline is more than 95% complete, and developers that had aimed to bring it into service this summer. But litigation is delaying the final work and inflating the costs. They find themselves in a situation where that project cost was originally $3 billion. It's now $6 billion. Now, who do you think pays? You do. You do, in your bills. You take a look at them. You wonder why. This is why. This is why. And the funny thing is that natural gas, if you don't like coal and you don't like oil, this could replace it. Solar and wind cannot fill that gap. Toby, when I says, I don't think residents in South Carolina, North Carolina, Virginia, Georgia, Florida recognize that a pipeline is being challenged in West Virginia. Their energy security is being challenged because of people attempting to block this pipeline. And he talks again about Massachusetts. 3 large pipelines capable of transporting enough gas from Appalachia to serve more than 10 million households has been blocked. So what? They've got to import LNG from Russia because, again, they can't get it from the Gulf Coast of Florida because of the Jones Act, and we don't have the ships to handle it. Again, you look at this, you see this, and you say to yourself, all this inflation and all these things that we're paying for. Oh, my God, it's terrible. Look at this and supply chain this and energy costs here. Look no further than Washington, D.C. Look no further than all of the red tape that is thrown at all of these industries, all of these businesses. Look no further. Senator Joe Manchin has been out there, and he's trying to push for some sort of compromise on climate change, trying to get some of these things done. People, I doubt it. I doubt it. And again, people, the stupidity is not just here. It's everywhere. It's everywhere. I saw this story as well. Okay, we had this past week. We all heard Russia Russia cutting off the supply of gas to Bulgaria and Poland because they're not paying in the Russian currency, rubles, and they cut them off. Cut them off, and they're going to have to get supplied in other ways. And there's a story here about how the European Union is now going to cut Russian oil and gas imports to zero by 2027. And I said, that's nice. Again, it comes from a senior European Union official. Kind of like we hear that here. He said, senior administration official says. Whenever you hear that, you got to start scratching your head and said, that's nice. How do you plan on getting there? How in the world do you plan on being able to cut Russian oil and gas imports to zero by 2027? You want to show us some sort of map for that? I mean, in comparison to this past week to just, trying to get somewhere. Trying to get somewhere. How do I get from point A to point B? We go back last week. We talked about the underwear gnomes. This week, I'll mention Arnold Schwarzenegger. I was watching an interview with Arnold Schwarzenegger. And this was when he was, this is in the 70s. Well, he's telling the story about when it's in the 70s, won Mr. Olympia, and he got asked to be in some movie. And it was a fitness movie. I can't remember the name of it. But the director told him. I said, this movie starts filming in, 6-8 months. You've got to be 210 pounds or less. And he was 245, 250 pounds of muscle. So what did he do? He didn't just say, okay, I'm going to show up 210. No, you got to do something about it. It's the same thing. What are you planning on doing? Huh? You think you're gonna solar panel and windmill your way out of Russian oil and gas? No way. It's just platitudes. Long-term thinking is always needed. And I never forget going back. It's actually at the Republican National Convention. This was John McCain and Sarah Palin. Sarah Palin being up there. Said, drill, baby, drill. She wasn't wrong. Was she? She wasn't wrong. Anyway, got to take a break. WatchdogOnWallStreet.com. WatchdogOnWallStreet.com. Got to take advantage of all the great stuff we have at our site. Oh, you name it. Personal CFO program, account repair kits, podcasts, annuity help kits, college planning kits, all that stuff. WatchdogOnWallStreet.com or give us a call, 800-471-5984.
I've had so long when somebody
bringing America financial freedom one listener at a time. You're listening to the Watchdog on Wall Street with Chris Markowski.
Oh, yeah. Peter Gabriel. You know what? All right, quick story. Quick story about Peter Gabriel story. It's a cultural story as well. I don't know if I've told this before on the program. I don't know, I've been doing this for 22 years. I might have told it in the past. By the way, in case you haven't noticed, it's 1986 bumper music today on the Watchdog on Wall Street show. It's 1986. First sub-reference today was Ferris Bueller. If you missed the first hour of the program, again, you can get it on our pod. We'll put it online. It'll be there on the website. Sign up for the podcast so you don't have to miss anything. But anyway, my Peter Gabriel story. So I was studying in Italy, in Florence, Italy. Studying the European Union, the Maastricht Treaty, and how it started in Italian politics, and I also took art history there as well. But it was a great experience, and again, I didn't have much money. It was a very tight budget when I was there, and we saw signs up that Peter Gabriel was going to play in concert there in Florence, and it's not my fellow students there, money was no object, but it was for me. And we went to take a look at the price tickets. And there's, Chris, we'll all get the cheap seats. So we did. We did. I don't. I can't remember exactly how many lira it was. There's no euro at that time. How much it cost, but I think it was the equivalent, like $10 at the time. So we assumed going to the concert. We're in Italy. We assumed that we were going to be sitting way up in the rafters at this little amphitheater, this place in Florence, and we were wrong. We sat in the front. Here's the cultural thing here. So, Italians don't stand for concerts. They don't stand for concerts. They got to sit down. They got to have their glass of wine. Back then, smoke their cigarette, all sorts of stuff. So, yeah, there's my Peter Gabriel cultural difference stories. Cheap seats. Cheap seats are in the front, standing in the front. Anyway, let's get into Elon, shall we? I think the funniest tweet from the week from Elon was he said he was going to buy McDonald's next and fix all the ice cream machines. You kind of hand it to him, he doesn't care. But, man, they're coming after him. I guess, the stories out there. And she got her defenders with this lawyer. This lawyer over at Twitter, what's her name? Vijaya Gad, I think her name is. He tweeted an image of Miss Gad overlaid with the text that repeated allegations that Twitter had a left-wing political bias. And again, they're now saying that this is terrible. This is awful. You can't do this. And I'm like, I guess this lawyer broke down crying during the meeting where they learned that Elon Musk was buying the company. And who is this lawyer? She's the fascist over there. She's the one that deciding, well, no, that you can't put that on there. She's the one that decided, you know what, we're gonna cancel the New York Post. The Babylon Bee. These people are truly frightening, because the funny thing is, in their mind, they think that they're doing the right thing. They do. I've explained this theory before here on the program, where the whole concept that the far left out there, and it's not even the far left, the left in general likes to treat human beings like rescue dogs, and they're the masters. They think that most people out there, most people in flyover country, most people out there are dumb as a box of rocks, and it's their job to take care of them. I've explained this before. I've got clients that are extraordinarily wealthy, and they're on the left, and this is the way that they think. It is their duty. It is their job. So these people that do this at Twitter, they actually think that they're doing the right thing. Damn, it's sad. It really is. What's Musk going to do with Twitter? Again, some of the things that he's put out are things that we suggested. Changing the model to some degree. I really like to use Twitter. I don't. My Twitter account is attached to my Facebook fan page, and whatever I put out there goes onto Twitter. But I don't go on to it. I don't go looking at. I don't follow things there because, again, I equated it years ago to the pink slime. A lot of social media, not just Twitter, but social media has turned into the pink slime from Ghostbusters 2. You know, the pink slime that was underneath New York City. And if you got near the pink slime, it put off all this negative energy and you'd start fighting. You remember that? That's, what social media has become. To me, no, nothing but positive. No, you try to say nothing but positive. You don't get into arguments. That's not what it's there for. I also like the fact that he wants to get rid of all the bots. All the bots, all of the nonsense out there that is designed to sway opinion. How many followers? Ooh, how many people are following this? What's hot on the Twitter? No. Stay away from all of that because it's all nonsense. Anyway, got to take a break. We get back a little bit more on Elon and Twitter and Bezos and all this business stuff that's taking place right now. All the drama that's out there. Anyway, make sure you check out our website, watchdogonwallstreet.com. And remind everybody again, our personal CFO program, our podcasts, account repair kits, all sorts of great stuff. Watchdogonwallstreet.com or give us a call, 800-471-5984. Hey, name this group. Name it. New Shoes with an N-U. N-U Shoes. S-H-O-O-Z, I think. Anyway, got to take a break. We'll be back.
You're listening to the Watchdog on Wall Street. Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
I'm kind of making fun of social media in regards to pink slime, but let's be honest. The mainstream media, same thing. And I don't care. Honestly, I don't care whether it's CNN or Fox. Doesn't make any difference. Doesn't make any difference. It's all about the fight. It's all about the fight. Remember that there was this great scene, and it was true. How many people remember back when you were in junior high? Junior high. I mean, it wasn't many. There's fist fights in high school were few and far between, for crying out loud. But you'd get them in junior high. And, the fight would start and all the kids would surround and be fight, fight, fight. You get that chant going. Remember that? There was that scene in Something About Mary. I keep thinking about that. Anyway, that's the media. That's the media. So this past week, Jeff Bezos puts out this tweet. He said, interesting question. Did the Chinese government just gain a bit of leverage over the town square? And he was talking about a New York Times piece that was out there that was questioning, Elon Musk has got a lot of investments there, Tesla's second biggest market, and Chinese battery makers are major suppliers for Tesla's EVs. Does China got something to do with this? And again, it blew up. Oh my God, headlines. And Bezos came out an hour later, answered his own tweet an hour later. And he said, my own answer to this question is probably not. The more likely an outcome in this regard is complexity in China for Tesla rather than censorship at Twitter. He says, but we'll see. Musk is extremely good at navigating this type of complexity. Anyway, yeah, the media wanted. They were trying so hard to get Musk and Bezos to fight. So childish. It really is. And there's questions out there. Yeah, Elon Musk does a ton of business in China. He does a ton of business in China. From what I'm learning, what's going to happen with Twitter is they're planning on abiding by the rules of whatever country that it's in. And again, there's different rules for Europe. Here when it comes to the internet. I read a lot of many European papers. If you go to one of the European websites, European newspapers there, every single time that pops up on your screen about tracking and all of these other things, and you have to accept it or not accept it, they give you the option. They don't do that here in the United States. It's just different rules there. Again, we'll see what happens. Musk also went after the SEC, calling them shameless puppets of Wall Street, basically talking about, back in 2018, he was considering taking Tesla private. And I guess he had one of the Saudi sovereign wealth funds that was going to back them there. But the SEC is now saying that he put out a tweet that he was wanted to buy Tesla and he had the money available, but he really didn't. And he was just going after the Securities Exchange Commission, saying, it's funny that it's going after me, but all of this other stuff that goes on Wall Street that they don't go after. Because, again, as wealthy as Musk is, as wealthy as he is, he's not a part of the club. He's not a part of the club. And, again, they made that perfectly clear. I mean, whenever Biden is doing something when it comes to electric vehicles and whatnot, is Tesla ever there? Is Tesla ever there? It's like doing it's honestly, let's be honest, it's like doing a documentary on the the NBA and not having the Lakers and Celtics a part of it. All right? Who's done more for electric vehicles than he has? So no, he's not a part of the club, and this is why they're gonna continue to go after him again and again and again. Quickly on this story about Disney. They've lost, I don't know, what about $35 billion in market valuation since deciding to get into the culture war in Florida. Listen, I don't get it. I don't understand. I don't understand CEOs that feel like that they feel the need that they have to pander to certain elements within their company, certain employees within their company. And quite frankly, if you don't like the fact that the company that you work for is not getting involved in certain societal issues, political issues, well, then go find yourself another job. Go, if you don't like it, go elsewhere. I don't understand this. Not to mention the fact that Disney decides. This is the irony, the whole thing, the whole glass houses thing. Disney lives in a glass house. For crying out loud, they worked with the Chinese secret police in filming Mulan in the area where the Uyghurs live, for crying out loud. They're okay with that. That's fine. But teaching, I don't know, sex education, gender nonsense to kindergartners, to third graders, that, you don't want to have that in schools. They have a problem with that? Come on, man. Come on. Give me a break. Give me a break. Seriously. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Don't go anywhere. But if you do, get to our website, sign up, personal CFO program, all sorts of great stuff there. Watchdog on WallStreet.com. Or give us a call, 800-471-5984.
This is the Watchdog on Wall Street.
Oh, yeah. It does a really great job talking about Disney. Great job of roasting Disney's the folks over at South Park. Oh, my God. They've done some unbelievable stuff. I mean, when they were talking about and making fun of the ties between Disney and China. I don't know if you're familiar with this. But it was like a joke. People in China were comparing Xi Jinping to Winnie the Pooh, that he looked like Winnie the Pooh, and he hates that. He hates that. One of the episodes of South Park, Mickey's trying to do more business, and actually they show the CEO of Disney on South Park as Mickey Mouse. Trying to do more business in China, and they're sending all, the Marvel Avengers over on an airplane and all sorts of stuff. But Mickey meets with Xi Jinping, and Xi basically tells them to kill Winnie the Pooh. I'm not making this up. But one of the dads from South Park ends up doing it because he wants to sell his marijuana in China. Anyway, yeah, they do a hell of a job roasting Disney. I had to talk a little bit about adjustable rate mortgage demand doubling. Here we go again. Is it here we go again, or is it not here we go again? When I mean here we go again, are we going back to 2005 and 2006 and 2007? I don't think so. Mortgage rates, they've gone up. They've gone up. What is it now? Average, I average interest rate, 30-year, 647,000 or less, 5.3, 5.2. And that's with a 20% down payment. So obviously these higher rates are obviously hitting buyers. And again, I can't stress this enough. Okay. There's some great real estate people out there, great real estate agents, and there are some not so great real estate agents. When rates come up, the price of homes come down. There's an inverse relationship between the two. It's not instantaneous, okay? But it will happen. And I know it's going to take even more time. It's going to take even more time now with the supply chain issues and how long it's taking to actually put up new homes. I get all that. That's a part of it. But I'm telling you, people, this is, something that I really, I try to stress to all of my clients. You do not want to become house poor. That's not fun. Okay. What's fun is owning your stuff. You don't want your stuff to own you. Okay. And people that are overextended when it comes to their homes, it's just a world of stress. If you can wait. Anyway, got to take a break. WatchdogOnWallStreet.com. WatchdogOnWallStreet.com. We'll be back.
Chris Markowski is the watchdog on Wall Street. The only man who is taking on the Wall Street establishment. You're listening to the Watchdog on Wall Street with Chris Markowski.
I'm going to get into, we got a lot we still got to go over the program. I still got to get into the GDP growth first quarter declining, what that means. Again, we're going to start hearing that word recession again. You know what? Let's talk about it now. Let's talk about it now. It goes into the next hour. It's going to go into the next hour. It is what it is. Markets, whether you want to believe this or not, markets do well when there's a recession. Don't believe me? Look it up. Why is that? Yeah, how could markets be doing well during recessionary periods? Well, it's the anticipation of coming out. That's what happened. So you had 1.4% decline in the first quarter. There was again, the growth rate was supposed to be 1%. Now, again, we don't know what's going to happen, how these things are going to be revised down the road. But the textbook definition for a recession is 2 quarters in a row of negative economic growth. 2 quarters in a row. And again, we treat this, and the media treats this like it's some bloody monster. It's like some monster. And again, I get the emails from people, I do, distressed. What happens if there's a recession? Oh, no. What are we going to do? Listen, we talked about this earlier on the program. As far as your portfolio is concerned, you got a diversified portfolio. You got high quality dividend paying securities. You turn off all the noise. If you have a goal centric plan, tune out the talking heads. Live your life. Live your life. Most of the financial industry, including the media, again, I know we talked about it a lot today, but it's true. They're enriched by people acting out of fear in an irrational manner. That's how they make money. So again, what is a recession? What is a recession? You got the National Bureau of Economic Research. It's a nonprofit group, another nonprofit group in Cambridge, Massachusetts. And they define a recession as a significant decline in economic activity spread across the economy, lasting more than a few months, that is visible in measures such as gross domestic product, employment, incomes, and industrial production. They happen from time to time. Now, again, recessions, they've changed to some degree. Companies now, they understand, they handle supply chains despite the supply chain problems we have right now. The use of technology, how productive workers have become. It's allowed for many businesses out there to kind of see problems that are coming, reduce excess inventories, but that's not even a problem right now. You know, one of the reasons why it could be having a slowdown is because the inventories are too small. It's a different dynamic. It really is. Most of the recessions that occurred between 1945 to 1981, they were actually caused by the Federal Reserve raising rates to suppress inflation. Now, we've got that now. We've got a site where the Fed is out there raising rates. But is that what caused it? No. As far as recessions are concerned, I try to explain this in terms of the human body. I've done this before here on the program. They can be very, very healthy. It's like the lymphatic system of the human body. It's your immune response system. And if you own a business out there, now, get a recession, things are going to slow down to some degree. Things are going to be a little bit slower. Well, what do? You try to become more efficient. You try to look to see, well, you know what's working, what has worked really well, what hasn't worked. It's almost like a look in a mirror type of thing. How can we make ourselves better? And businesses that do this, that reevaluate, that adjust, come out stronger than they did going in. We invest a hell of a lot of money in our business during these periods. We do. This is, when economy's going like gangbusters, believe it or not, we're a hell of a lot more conservative. When things hit to periods like now, I look at it as an opportunity. And the same way we handle portfolios. So, again, as far as the recession is concerned, are we going to get another quarter of negative economic growth? I don't know. And quite frankly, I don't care. And it shouldn't care. You shouldn't care either. You shouldn't. The business press is going to love this. They're going to love talking about this. They're going to love going over. They're going to parade. They're going to, you get all sorts of requests to come on programs to talk about this and what it means to your portfolio. It shouldn't mean anything. I have a fiduciary responsibility to preach truth to the news. And one of the greatest investing truths, the primary obstacle to achieving real return, goal achieving returns. It's not investment performance, but it's your behavior. Not so much what your funds do, but what you do. And again, I'm going to say this. Don't believe me? Look it up. Look it up. Through recessionary periods, during all that stuff, there are always investment opportunities. Handle it as such. Got to take a break. Watchdog on wallstreet.com. Watchdog on wallstreet.com. All sorts of great stuff there at the site. Take advantage. Personal CFO program. You name it. Watchdog on wallstreet.com or give us a call. 800-471-5984.
You're listening to the Watchdog on Wall Street. Well-known author, investment banker, consumer consumer advocate, analyst, trader. Chris Markowski is the watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
I'm going to do my Steve Jobs one more thing. One more thing about recessions and this negative GDP print in the first quarter. One more thing. It's probably, I'm going to go out and tell you, it's probably some of the most bullish news I've heard in a long time. Think about that. We consider this is probably some of the most bullish news as far, even use bulls, bears, positive news. Not only, I'm telling you that this negative economic print is actually positive economic news, having to deal with inflation and also for the markets. Yeah. Again, what were we telling you last year? What were we telling you last year? Telling you about the markets and rotating assets out of a lot of these high-flying tech stocks and going into the energy sector. What were they telling? What were all the pundits telling you? Oh, no, you can't do that. That's dumb. Those industries are dead. Solar panels and windmills. How'd that work out? Who was right? Anyway, I saw this. Saw this story, and I got a kick out of it. Argentina. They did a story about Argentina. They said, are you sick and tired? Are you sick and tired of inflation? Inflation got you down. At least you don't live in Argentina. And they go there, and they talk to some of the people there. And the shopkeeper, this Jonathan Faez, he's got a word of advice. Word of advice to people around the world obsessing about inflation. Chill out. Said, I have friends in the United States and Spain, and they're telling me they're going crazy with their annual inflation of 5 to 7%. And I actually think it's much higher than that. Anyway, he says, here we reach 4% almost every month. Welcome to Argentina. Yeah, their inflation rate, 55.1% over the past year. Oh, man. Ouch. What do people do? Honestly, if you have this type of inflation, it's kind of like a live and let live, say la vie type of a situation, because you get your paycheck, you spend it. You spend it because it's disappearing as you speak. Go out and buy stuff, hoard stuff, buy extra, because it's going to be worth less. You also, in situations like this, you want to borrow money. Now, if you can go out and you can borrow money, that's, with high inflation, why not? You're paying back with money that is worth less. Again, this happens when countries continue to print and print and print and print and print. And we've talked about modern monetary theory here on the program and the nonsense that they've been throwing at us. And I got to get a little bit more into it a little bit later on in the program. But, other countries have tried this modern monetary theory, and it's failed miserably. But again, by design, it could be these economists, many of these left-leaning economists and leftists out there, they would prefer that. They would prefer people to live that way. To them, that might be utopia to them. When I see stuff like this, I don't understand. I never really seem to understand this. I don't. If you want to go live there and have that type of environment, go ahead. What's stopping you? I'm sure if you wanted to move to Argentina, there's some sort of visa that you can get that you could work there. I'm sure I'm sure all these nations that have these policies that you like, why the hell you got to bring them here for? Why? You know, I just don't seem to get it. We've been doing things a certain way. We're a unique country in of itself. We talked about this in terms of, you know, what it means to be an American. We're different than most places. And one of the most distinctive things about us is that you can be French. You could be born in Paris. You could be born in Paris. You could be French, but you can move here to the United States. You can get citizenship. You're American. Just as American as myself. I was born here. Elon Musk, he was born in South Africa. He's American. See, the difference is that, you know, you can move to France as an American. If I decided to move to France, if I decided to get dual citizenship, or I gave up my citizenship and I became a French citizen, I'm still not French. Never will be. Yeah, that's the beauty of our melting pot and the concept here, but also our economic system and what's worked. What's worked for this country over time. And again, this is why I don't like the United States imposing our ways on other nations. If somebody wants to adopt what we're doing here, have at it. That's great. Hey, Argentina, you want to keep printing money like that? Fine. I'm not going to buy your bonds. I mean, Wall Street will sell them. Remember Goldman Sachs? Goldman Sachs, and it was Merrill Lynch. Excuse me. Merrill Lynch. They opened up offices in Italy, and a lot of Italian families moved from Italy to Argentina. They thought it was great marketing to sell Argentinian bonds to Italians. And man, they wiped everybody out. I remember talking about that. That was back in 2002, 2003. Around that point in time, I said, you know, America, don't feel bad. Maryland, they don't just rip people off in the United States. They rip people off all over the world. But anyway, so, again, now what's the Fed? This is going to be the ongoing conversation. What's the Fed going to do now? The economy has already slowed. It's already down 1.4%. That's going to help when it comes to inflation. Yeah, that'll be the conversation. That'll be the conversation. But I'm being honest with you. You know, if you're going to do it, do it. Go 75 basis points. Do it. Do it. Get another quarter negative. I don't care. We have got to rein in inflation. You got to suck a lot of the money out of the system because it's bouncing around everywhere. Bouncing around everywhere, and it's driving up prices. Story talking about how inflation is spurring 40% of small businesses to hike prices. Now again, certain businesses are different than other businesses. They have different margins. Correct? Other business, like you can be involved in certain, let's say you're in retail. Let's say you're in retail and you're able to, you know, get your, whatever you're selling. Let's say it's gym shorts at your retail store. And you're able to, you know, say, hey, listen, I can get this product, I can sell it at a certain profit, and I'm still doing okay. But your margins are X, and you can maintain them in and around that level. Other things like restaurants or coffee shops, different margins. So it's already popping up in cities around the country. They're now starting, if you want to use a credit card, you have to pay a 3% like surcharge on the bill because they don't want to pay the credit card fee anymore. And I was thinking about it this past week. I actually talked about this on the podcast. Another Italian story. Talked about Peter Gabriel and seeing concerts in Italy before. Go to a coffee shop. Never been to Italy? There's a different price for coffee. Different price for coffee depending upon where you are in the coffee shop. If you're standing at the bar, you're getting a standing. You get a cappuccino. You're drinking your cappuccino. You get a standing cappuccino. You get a cappuccino, and they'll ask you, you're going to sit down? It's more. If you want to sit down, it's more. And many of these places that are waiting on you out there at the tables, you sit down, it's the cover charge. Coperto. And the service charge, servizio, on the bill. Again, they have different margins there. The workers get paid more. They got to find a way to do that. Anyway, yeah, small businesses out there, they're going to have to raise their prices. Certain ones. How's this inflation stuff going to end? So how does it end? I know we discussed this before. I'm hoping that what we're going to see happen out of this entire cycle, everything that's taken place, is a reworking of the globe. And what I mean by reworking of the globe is, going to start moving a lot of supply chains closer to home. Certain ones are going to remain where they are for a myriad of different reasons. But if we can learn to start bringing things closer to home, I think it's going to be extraordinarily beneficial. And what we've just seen just over the past few months, for example, you throw in Russia, Ukraine, Putin. You basically, and again, we haven't seen her. We haven't seen Angela Merkel. Angela Merkel, who was the leader of the free world. Look at how she stands up to Trump. She hates Trump. Trump doesn't want them to have their pipeline to Russia. Says it's a bad idea. It is a bad idea. Now, again, it was none of our business. Well, we made it our business in the sense that we agreed to continue to defend these places if they continue to rely upon places we want to defend them from. No logic, no sense, no reason in that at all. Trump was right. So Germany is all going back, and the funny thing is that Gerhard Schroeder, who was Gerhard Schroeder was in charge before Merkel, okay? And Merkel was considered kind of on the conservative side. Schroeder was a social democrat. He's best buddies with Putin. He made himself a fortune. He's on a board of directors of Gazprom, behind the pipelines, behind Germany, deciding to get in bed with Vladimir Putin and Russia. And Merkel went along with this, too. And we're going to shut down our nuclear power plants. And we're going to shut down our coal. And we're going to transform to green. And in the meantime, we're going to get natural gas from Russia. And how'd that work out? You're going to have, we're going to have to start deciding who you want to do business with. Are they going to be a reliable partner? And that's what's going to come out of this period. And not necessarily a bad thing. Like I said, recessions, these periods like this, come out on the other side, can come out stronger if we choose to. Or we can be idiots. Anyway, Watchdog on WallStreet.com. Watchdog on WallStreet.com. Again, become part of the Watchdog on Wall Street family. Personal CFO program, newsletter, you name it. Watchdog on WallStreet.com. We'll be back.
You should believe in math, not magic. You're listening to the Watchdog on Wall Street with Chris Markowski.
Yeah. You want to hear dumb? You want to hear really, really dumb? I'll give you really dumb. I'll give you brain dead. Well, I guess it depends. It's not dumb for them. It's more money for them. It's more power for them. It's just dumb for the rest of the country. You got Chucky Schumer from New York and Joe Manchin getting together. And they're trying to have a meeting of the minds here at Manchin and Schumer. You got a lot of Republicans out there. Manchin should be a Republican. He should run for president as a Republican. Really? Manchin's talking right now about raising taxes to deal with inflation. Where the hell do these guys, where the hell Do these guys get their economic? Do they have any clue on how the world works? This is, again, I can't believe Manchin is this naive. Oh, we're going to raise taxes and we're going to use it to reduce the deficit. What a bunch of bull excrement. That money is going to come in. They raise taxes and they're going to spend it. Who the hell are you trying to kid, man? Who the hell are you trying to kid? They just tried to pass this Build Back Better crap and send out permanent checks to people and give universal pre-K and all this garbage, and you think that you're going to tax people more and they're not going to find a way to send it right out the door? You think they're going to deal with the deficit? It's nonsense. And I'm not here to praise the elephants because they can be just as bad. They can be just as horrible. But you think, I got an idea. Let's not let people have their money. We'll give the money to these jerks in Washington, D.C. so they can spend it. Did I mention it? I think I might have mentioned this last week on the program. I'm reading an article in the New York Times. But again, another nitwit there. All this money that was in Joe Biden's COVID rescue, $1.9 trillion American Rescue Plan, it's being spent on basketball courts and this and that and the next thing. I'm like, wait a second. That was supposed to be for COVID relief. If you don't think all of this stuff is inflationary, it is. Because when the government spends it, they're not looking at what something is going to cost. Whereas you and your household say, I need a new basketball hoop for my house. But right now, because of supply chain issues, they've gotten very expensive. So I'm going to wait. Government doesn't think that way. Oh, $10,000 for the basketball hoop? That sounds good. Who cares? Money is no object to them. Never is. Money is never object to government. Baseline budgeting every year. Increases priced into every single program. Their job is to spend it all. Every dime. What do you think governments are doing with all this COVID money that they got from Biden? They're trying to figure out ways to spend it for the fear that they might have to give it back. So it's going to be wasted on all sorts of garbage. So there you have Manchin and Schumer. Now, the answer to inflation is sending more money to D.C. Oh, that's a great idea. So stupid. Anyway, Biden administration, they're going after charter schools again. Education department came out finding the regular school system isn't working. Isn't working. Story here about how the state of Massachusetts might want to take control of their Boston public schools because they're just doing so poorly. Mind you, they spend the second highest amount per student in the entire country. New York City is the highest. So they want to get rid of their charter schools as well. Why? Well, because the teachers' unions hate them. Teachers' unions, they don't like them. And they, again, Democrats, they like the money from the teachers' unions. Teachers' unions back Democrats. So it's never been about the best outcome for kids. And this past week, it was at U.S. News and World Report's, I think it was them, put out the best high schools in the country. List the top high schools in the country, and they rank them. And I get a kick. I get a kick out of these rankings. I really do, because it's all about where and who areas are where parents care. And this is one of the things that gets lost in the sauce when it comes to education. Charter schools give opportunities to parents that might not be able to afford to live in some of these high tax neighborhoods, get their kids into schools because they care about their kids' education. Why wouldn't you want that? Why wouldn't you want them to be in a better environment, a better outcome, so they can build and create and do things later on? That's money, politics, of course. Never about the kids. Never about what's doing the right thing by the kids. Never has been. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Don't go anywhere. We'll be back.
Chris Markowski is the Watchdog on Wall Street. Bringing America financial freedom one listener at a time. You're listening to the Watchdog on Wall Street with Chris Markowski.
Top Gun tunes here. By the way, if you've seen the trailer for the new Top Gun, it looked pretty good. Looks pretty good. Doesn't look like a woke movie to me. So it's right up my alley. Anyway, welcome back. Free beer. If I was to put out a survey, if I was to ask young Americans if they supported the government giving them free beer, what do you think that survey would look like? It's probably 8 out of 10, 9 out of 10 young Americans say, yes, I want my free beer. Well, same thing here. Nearly 9 in 10 young Americans support government action on student debt. You don't say. Oh, no. You mean I borrowed $150,000 to go on a 4-year cruise known as a bachelor's degree? No, it's not like that for everybody, okay? I'm making fun, but you know who you are, okay? And you know the kids, they turned it into a 4-year cruise, all right? But anyway, you borrow that amount of money, and so you got a useless degree. You gender studies, useless. Sorry, it's a useless degree. Gender studies. Oh, well, I guess it's not useless if you eventually get yourself a position on MSNBC where you can be a bomb thrower there. I don't know. All sorts of other crap degrees that are out there. You borrow all this money, and I don't have to pay for it? Sure, sign me up. That's what these kids are saying, because they're kids, and they don't know any better. They're children. They don't know any better. And I'd say right through, where do you get off? Who the hell do you think you are, kid? Huh? What do you think you are, kid? Punk? You think that I should have to pay for your degree? Why? What gives you the right to actually even think that that's my responsibility? This angers me to no end. It really does. Really does. I've talked about this before. Hey, Markowski, you should borrow money. You got kids going to college, you should borrow the money. They're going to get it, sent back to them anyway. No. See, I didn't have an ethical bypass at birth. And again, I'd like to be able to look myself in the mirror. I'm not going to do it because it's wrong. That's why. It's the wrong thing to do. Again, I don't know. Biden's trying to come up with some sort of action on student loans and student loan forgiveness and executive orders. I hate that phrase, executive order. I don't even think it's legal. I don't think. Hopefully there'll be, this goes through. There'll be some sort of challenge to it in the courts, where you can just all of a sudden, wave your magic wand, and all of a sudden, all of this money, all of this taxpayer money that was lent to all of these kids can be forgiven. Drives me nuts. Anyway, quickly on this story. Yeah, I talked about this on the podcast. There was a great story in the Wall Street Journal talking about getting into the Ivy League and how hard it is, the amount of people that are applying, I guess because you don't have to submit your SAT scores. And they talked to this girl, got a 1550 on her SATs, 3.95 grade point average, founder of the school's accounting club. She either directed or acted in 30 plays, sang in the school choir, taken 11 AP classes, done all sorts of stuff, side jobs. She didn't get into Stanford, Hartford, Yale, Brown, Cornell, University of Pennsylvania, University of Southern California, Berkeley, Northwestern, all rejected her. Each and every one rejected. You know what I think they should have in these rejection letters? You got to tell. I think they should tell you why. It would be better if they actually explained why. I couldn't believe that they put this information in there. Just have a quick listen here. This student didn't get in, and basically they came down to this. This is Wall Street Journal. She is a middle-class white female from a public high school in Texas. Each characteristic places her in an overrepresented group. Holy cow. It gets worse. Nearly half of white students, listen to this, nearly half of white students admitted to Harvard between 2009 and 2014 were either recruited athletes, legacy students, their parents went there, children of faculty and staff, or on the dean's interest lists. Those are whose applicants whose parents or relatives were going to give money to the school. Now, I'm not making this up. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Don't go anywhere. But if you do, get to that website. Sign up, personal CFO program, all sorts of great things there. Podcast, you name it. Watchdog on WallStreet.com or give us a call, 800-471-5984.
Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
This past week, Matt Taibbi again, great column. And this is a topic that we've discussed here on the program. And again, this is one of the things that I've explained to you here, in my experience over the years, appearing on TV and understanding how the news media works and how they try to push you and nudge you and get you going in a certain direction. And I always like full disclosure. I say it all here on all the time. I say full disclosure. If I've got something, if I could be biased in any way, I'd like to tell you that. But I'm going to still give you my opinion, but I have no fear of telling you that, I may be biased because of whatever reason it may be. The news doesn't do that. Media doesn't do that. And where they really fail to do that is when it comes to all of their experts, their war experts, their generals, their admirals that come on the program and telling you, yes, we need to send more missiles, and these are the things that we need. We need to increase arms sales, the equipment we provide. We got to send the right message. All of these things, one after another, after another. All of these ex-military experts and Department of Defense people, all that good stuff. Now, what should they disclose? The fact that they are lobbyists. They're lobbyists for various different defense contractors, or they may not be lobbyists. They actually, some of them come on, they actually sit on the board of the directors of companies where they're going on programs and pushing a product. You know how you have to say it's a paid advertisement? You know, sometimes on certain programs, it's just paid advertising. But with this stuff, it's the same, is it? Is it not? Is it not? I mean, you have on morning shows, okay? Typically morning shows. They'll have a segment there where they'll be doing outside barbecuing with blah, 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 blah. And they got some chef there. And you see all of the products that they're using there. Those companies paid to have that segment there. They're not, you know, showing you this, making it kind of look like it's a fun, newsy thing. But this is hard news we're talking about. This is in regards to war, for crying out loud. Now, I'm not saying that these animals, they might be right in their assessment at that point in time. But shouldn't you let people know? If you've got a general on your program that's talking about the need for more Javelin missiles being sent to the Ukraine, shouldn't you let the people know that this very same general sits on the board of the directors of the company that makes those missiles? Yeah, I think if you're trying to do the right thing, you're trying to be honest, you should. Damn straight you should. Anyway. Got to take another quick break. We're running out of time. We've got a lot of political stuff here, and I wanted to do some woke stuff as well. Never enough time on the program. That's why you sign up for the podcast, because we're on every day. Watchdog on WallStreet.com. Sign up for the podcast there and all sorts of other great stuff. Watchdog on WallStreet.com. We'll be back.
You're listening to the Watchdog on Wall Street. This is the Watchdog on Wall Street.
Yeah, I should say very attractive lead singer of this band. Off there. Saw her at Saratoga Performing Arts Center. It was right around 1985, 1986, as a matter of fact. Anyway, welcome back, everybody. It is the Watchdog on Wall Street show. Again, a lot of emails, a lot of questions, a lot of people really, concerned, getting wrapped up in the whole John Durham special counsel team and Fusion GPS. And then there was a leak this past week. Somebody, I guess, showed the coordination between Fusion GPS and the media and all of the various different newspapers and media outlets there that were just, give us information on Trump. This is prior to him being inaugurated. They tried to actually put a stop to it. I think that was kind of the plan at the time. Their information in regards to Joe Biden and his taxes, 5.2 million unexplained income. Yeah, go on and on and on. Yeah, they'll report on this stuff. They have to. But again, what's the George Carlin rule? They're a member of a big club, and we're not in it. So do I actually think that anything substantive is going to come from this? No. Even those chants they used to have, Trump used to get the crowd going with the lock her up. Come on. For crying out loud. They couldn't even get the list of people that were at Epstein's client. I mean, they have all of this information. They're not gonna do it. I mean, somebody might take a fall for a short period of time. What happened was one of the guy was the stroke there, and he lost his job. He's working somewhere now in government. He's all set. Another FBI guy as well was caught up in this. First they said he lost his and then he got his pension reinstated. He's probably teaching college somewhere. Someone might take a short little hit, might have to do a quick little perp walk, but it'll be just fine. I don't have much interest in this. We just have to choose a hell of a lot wiser who we send to Washington, D.C. We need to stop looking to political parties and who they're telling us to vote for. We have to make that decision. We need to put people out there that are accomplished, people that have built things, created things, not people that have gone from law school to government. It's not working. Anyway, we talked about this when they announced this here on the program. CNN Plus. So you want me to pay extra so I can watch some show about, I don't know, Anderson Cooper teaching me parenting tips or something like that? You think that there was a large swath of people out there that thinks that this is great. It's kind of like Ben and Jerry's coming out and saying, hey, you know what? We're going to have a Brussels sprout flavor. Sure, you'll get some people that want that Brussels sprout flavor, but it's not going to make any money. CNN Plus. 1 month after they launched this thing, it's getting shut down. Is it so hard for people to understand that people want straight news? Is it so hard? People are tired of all this crap. Oh, yeah, that's what I want. I want to watch Don Lemon, or I want to watch some retread from Fox or MSNBC to tell me what to think. No. The big time fail. What was CNN's top show? You know what the top show what used to be before he died was Anthony Bourdain. Anthony Bourdain. It was the guy. Top show on that place. Anyway, I remember this is, I don't know, wasn't that long ago. 6-7 years ago. 6-7 years ago with CNN. They were doing some programming. They were coming up with new programming, and they met with me there. I'm trying to remember the name of the guy's name. I gotta see. I wonder if he works there. It was like head of new programming over at CNN. I can't remember. Jonathan, something like that. Oh boy, conversation with him. I was going great till he found out my politics. It was funny. I was there, and the one person that was on there was another political person, didn't even understand what the concept of libertarian was. Didn't even get it. Thought it meant that you were like anti-gay, and didn't even understand the concept. Yeah, we kind of believe in the Constitution and freedom, and I could give a damn about all that other stuff. No idea. These are people that work at CNN. Extraordinary. Anyway, that attempt to cancel Joe Rogan, that failed. Joe Rogan is still there, and the company released their numbers, and their subscribers went up. Their paid subscribers went up. This is after the whole Joe Rogan controversy and trying to get him kicked off the platform because you didn't like what he had to say. I'm gonna ban it. I'm gonna ban it. But you know who is leaving? The Obamas. The Obamas are going because no one's listening to their podcast, and Spotify's like, see ya. We're not paying you for nobody to listen to your show. Sorry, it's got to go. Again, how the real world is supposed to work, actually. Anyway, have a wonderful, wonderful week, everybody. Just want to remind everybody again, we're here for you. We're here for you. Get to our website, watchdogonwallstreet.com. Sign up for our personal CFO program. All sorts of great stuff. Watchdogonwallstreet.com, or give us a call, 800-471-5984. God bless.
Chris Markowski is the Watchdog on Wall Street.